Hello, everybody. We're here on Roundtable on the Street. I'm Emin from Avalanche and Aly Madhavji from Blockchain Founders Fund, two of the most successful entrepreneurs in the space. Aly with over 200 investments in blockchain. Avalanche is taking, no pun intended, the industry by storm. And I think one of the great things, just to compliment you immediately, as a person who's been in the tech industry since 1991, because we both have a Seattle background, that's where we built our team out of Microsoft. The one thing that's I would say disappointed me about the whole blockchain and crypto industry is you had a lot of people that didn't have, I think, a lot of business experience and not a lot of technical experience. And I think about when it comes to platforms, I think people had a vision for what something should be. They do a PowerPoint, they raise a bunch of money, and I mean, the biggest ICO in history didn't write a line of code. Mm-hmm. And I think about your PhD and Cornell background, and we're both went to University of Washington and computer science program there. Loving the foundational strength of your company, which has to be technology. And so many failures, so many penetrations of databases. I had a chance to buy Bitcoin at almost zero, but my engineers from Microsoft said, unstable, don't trust it. And so trust, in this world, I think is number one. I'd love for you to talk about, your foundational technology, because I think that's the most important thing here.
Sure. So let me say a few words about what you said. So the early days of blockchains were actually really, really interesting, and they were very welcoming to a lot of people from diverse backgrounds. And people ended up getting into the space through all sorts of paths and alleyways, some involving the darknet markets and so forth. There were a lot of people who were trying to do good, but they were not quite equipped to live out the vision that they had. And so in the early days, there was a lot of design by gut. If you look at the first couple generations of systems that were designed, they're just designed by people who don't have much knowledge in the topics that they're trying to build something in. So you see a lot of early systems just sort of, they didn't even understand what metrics to push for. For example, everybody was chasing transactions per second. They did not understand that latency was actually the key driver for fast systems. And so, the distinction between throughput and latency is something that should be apparent to any engineer, but wasn't to the early founders. That was one of the things that as an academic at Cornell, I had to sort of go out and try to.
The leaders were so young.
They were so young, and they were learning as they went along. So my story is actually fairly straightforward. I started out as a professor at Cornell, got into the space way long time ago, back in 2002 with a system called Karma. So it's before Bitcoin. It had proof of work minting in it, but it didn't have proof of work consensus in it. So when Satoshi came, I thought, oh my God, this is an amazing breakthrough, a brilliant breakthrough. And I looked into what was happening there and found the biggest known flaw in Bitcoin mining. It was called selfish mining. It created a lot of stir and controversy. There were calls for Cornell to fire me. It didn't happen because I had tenure and so on. Anyway, so long story short, people understood that I was there to try to help the protocol, not tear it down, to try to sort of characterize when it's good, when it's not. Then I worked on Ethereum. I called out the DAO hack before it happened. The hacker ended up using one of the vulnerabilities that we called out. And I worked on characterizing the safety of these protocols, their speed, etc. But ultimately, what happened was I was working with Vitalik, Vlad, Zamfir, and other Ethereum researchers on taking Ethereum to the next level. Right. They needed to switch to proof of stake. And to do that, they needed a better consensus protocol, a lightweight consensus protocol. And at some point, I realized that it was going to be very difficult to try to achieve the vision within the confines that they had set for themselves. And it was also very difficult to try to make headway in that community. And so the Avalanche protocol sort of came to us. So we had a hunch that we could build a different kind of a consensus protocol that is much faster. Just to give you a brief background in this.
Can we slow down?
Sure.
You're talking inside baseball. No. I think, no, not too much. It's fascinating.
Okay.
We would love to bring the hundreds of millions of viewers that we have syndicated out from the street.
Gotcha.
Who may own Bitcoin in a form of an ETF.
Got it.
They may have gone to Ethereum. And what I would love for you to do is talk to my father. No, this is live right now. Talk to my father who's at a golf course in Arizona, who has never heard of Avalanche, doesn't know what proof of stake or any of this.
Got it.
How about what do you do?
I see. So let's see. Avalanche sets itself apart from all of the other systems out there by being one of the fastest, lowest latency, and most flexible platforms out there. There are two components to what makes it so fast. So at the heart of all of these systems lies what we call a consensus protocol, a set of algorithms that make sure that the network as a whole tracks everybody's accounts, everybody's ledgers, how much money you've got, what tokens you sent to whom, etc. So that process is obviously fairly complicated because these are open systems. There are potentially thousands of participants, and you don't control all of them. It's not like Facebook. These are open systems. So to make that process work, there are two approaches that were available prior to Avalanche came along. One is the Bitcoin approach, which involves mining and a lot of electricity, a lot of energy. The other is essentially what we call classical protocols, where machines talk to each other like senators in a Senate, like 100 senators trying to pass a bill. But prior to Avalanche, all of the protocols involved all of the senators, all of the validators, talking to all the others. And so that doesn't scale. And the big breakthrough behind Avalanche is a consensus protocol where a group of entities can make a decision, even with bad participants inside the Senate, even with evil actors inside the Senate, without having to talk to every other member of that Senate, of that consortium. So that means that we can make decisions under a second. Whereas for Solana, it's about 12.8 seconds, whereas for Ethereum, it's 2.5 minutes.
Yeah.
So we can build systems that are far faster.
Can I ask you a question? I remember my first day at Econ 201 in Kane Hall. I'm sure you're familiar with it.
Yeah, of course.
And said economics can be thought about in one line. There's no free lunch. Okay?
Sure.
What's the cost of your speed?
The cost of our speed is...
Is security one of them?
Sure. Security is not one of them. So we do one thing that Bitcoin also does, which is the guarantee that we provide is probabilistic. So this will get very, very wonky and very detailed very quickly, but the security that we provide is on par with Bitcoin. And remember, when Bitcoin came out, people criticized Satoshi for providing a probabilistic guarantee, that it's not 100%. And Satoshi's response at the time was, well, look, you're operating on chips that also are probabilistically correct. They actually miscompute every now and then as well. So he had essentially done the math to make sure that the probability of a miscompute is so insanely small that it's not worth worrying about. So to the numerate people, that little change, that little shift from a deterministic algorithm to a probabilistic algorithm is not a big deal at all, and we can make the probability so small that the corresponding speed up is essentially for free.
So, Aly, you've been an investor in the space for about a decade. I sat in on a LP meeting of yours last week. I got to say, I was so impressed. I think you, before a lot of major funds, are clearly investing in infrastructure, not a bunch of coins that are going to go to zero. And so I think you're uniquely qualified to maybe translating, I heard you translate infrastructure to your LPs, right? And talk about some of the guys who are very young and successful, in the business. Could you explain to our audience how you think about Avalanche as a product that mainstream could understand?
Yeah, absolutely, right? So when I think about, Avalanche, and there's a number of other protocols, right? These are sort of that underlying infrastructure layer, right? So it's almost like the base of your house. And then you've got essentially these apps that are built on top of it. Think about like Facebook or these other types of products that consumers might be using directly. Those are built on top of these infrastructure layers. And Avalanche has definitely set itself apart because, being one of the fastest, being one of the simplest, it's actually been incredible. And so when we invest in companies, we actually have quite a lot of companies that have started to build on Avalanche, that have products live on Avalanche because it's faster, because it's extremely cheap. And I still remember, the early days, right? when you use Ethereum in the early days, sometimes it would just be very busy and it might actually take 6 hours to even send a transaction, or you might actually spend $600 or $1,000 I've spent on transactions just to do a simple transaction, right? And there's stories where someone's trying to send $100 and might need to spend $1,000 on fees, which is a terrible, deal.
Kind of, kills the point, right?
Kills the point.
Might as well use your bank. Yeah.
Exactly. But, a lot has changed with, Avalanche coming into the mix, and there's a couple other players that have, helped to make this a lot better, faster, cheaper, and it's also getting fairly easy to integrate for developers. And I think that's one of the big important pieces is it's got to have the tooling so developers can actually very easily integrate this into their products.
So let me expand on that. So
Yeah,
one of the
please.
key features of Avalanche is that applications on top can have their own blockchains. So whereas Bitcoin is a single chain, Ethereum is a single chain, Solana is a single chain, Avalanche is an ensemble of chains, a collection of chains that work in concert. What Aly is pointing out is that the different applications can have their own blockchains. We're working, for example, with consortia on Wall Street that want to have their own walled gardens, and for them we build custom bespoke chains where, for example, every participant is a U.S. citizen, for example. For, again, the European use cases, for Asian use cases, we've built custom blockchains with custom rules. So we can provide that kind of service, whereas everybody else ends up having to build a chain that ends up having to serve all applications at the same time. And as you know very well, when you try to do that, you can't serve any of them well.
Hey, let's pivot to what our viewers really care about, which is investing, right? On the Street, it's the original online financial publication, and we distribute and syndicate around the world. And what I'd love for you to maybe attack the metaphor or maybe embrace it, but we all remember when it was AOL and Yahoo, right? And they were first. And so sometimes I think that Bitcoin and Ethereum, and I'm just talking about as an investment right now, right? AOL had a couple $100 billion market cap, I remember. And they tried to make the pivot, but they weren't actual. They were not really, I think, embracing internet technology, and then Yahoo, kind of the same thing. Well, then the Googles and Amazon pivoted to be a marketplace instead of a single, destination, and Facebook. So my question to you, what is the next generation? Name your competitors, right? Maybe a quick differentiation.
Sure.
But investors want to know. And then how do investors get involved in what you're doing?
Sure. So the differentiation comes from this. Bitcoin was a single asset, single chain system. Ethereum, Solana, and others are a multi-asset, single chain system. Now, if you think that the future will end up having a lot of people who want to have their own chains, a lot of people with valuable assets that want to digitize them, but according to their own rules. The future involves people who want to digitize their assets, tokenize them, and make them accessible to the globe, but they don't want to be affected by other people doing the same thing. So then you have to look at a multi-chain future. There are only 3 chains that have a multi-chain architecture. Avalanche is the top one of them, and the other 2 are Solana and Polkadot. And we differ from those 2 because we don't have the kinds of components that they forced into their network to essentially restrict communication between the chains. Avalanche has a very loosey-goosey infrastructure. It's kind of like the Linux to other people's Microsoft, if you will. It's much lighter weight, and it's much easier to reconfigure it. And these chains can communicate with each other without having to go through any other decentralized bottlenecks. So that's our big difference.
And what about security? I don't know that you really addressed it compared to, say, a Solana.
Compared to Solana, compared to Ethereum, we are one of the most decentralized chains. We've been in operation for 6 years, and we've proven to the world that our security guarantees are on par with Bitcoin.
And what's in the future for investors? They've heard this, your impressive background, great vision for the future. How does an investor, do they sit around and wait, or how can they be involved?
So they can buy the token AVAX. So on crypto exchanges, a commodity that can be found on various trading platforms, as well as Robinhood and other areas like that. At the same time, we have some DATs coming up, these digital asset treasury companies coming up. And they will be, one of them was announced a little while ago, and there's going to be more that's in the works. And so that's going to allow people to buy through the public markets. So those are options that are going to be available.
That's wonderful. Aly, anything you want to add about this this ecosystem we're talking about?
I mean, we're a big fan, right? I personally use AVAX, Avalanche's blockchain, and many of our companies do. And so thank you for all the amazing things you've been doing to help make this system and better, faster, stronger, to help build a more transparent financial future for people.
Emin, Aly, so wonderful to have you as guests today. Great expertise, a visionary in the space, there from the beginning, and also creating the future. I hope you have a lovely and productive Token 2049 here in Singapore.
Great. Thank you so much for having me.
Thank you.